The Bitcoin Group, the American original. For over the last 10 seconds, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our guests, Bryce Wiener from BlockTech Financial,
Pleasure as always, Thomas. Thank you.
Christoph Atlas from Anonymous Bitcoin Book,
Good to be here with you guys today.
and I'm Thomas Hunt from the World Crypto Network. Moving on, Issue 1, Bitcoin Sidechains Unleashed. The Bitcoin Sidechains white paper has arrived, and through a two-way peg, the Sidechains paper claims that it will be able to reuse the Bitcoin sequence to create all kinds of altcoins and other digital assets. In the AMA, they also claim that they could envelope Ethereum, perhaps Counterparty, and most certainly Doge and Litecoin, as well as all altcoins. Is this the future made out of sidechains? Is it over for the altcoins? Bryce Wiener.
Well, folks have been asking me about this a lot, and I got to tell you, first of all, no, it's not over for altcoins. The cryptography is exactly the same between Bitcoin and altcoins. And so when you talk about an implementation of sidechains, we can just take that implementation and put it on any altcoin we want. So that sort of mentality that this is going to somehow be the death knell of altcoins is purely ridiculous. And you know, there's really two things that are very disturbing about it. And one of it is this blockchain minimalism, where we don't need blockchains other than Bitcoin. And and Peter Todd went on this amazing rant about sidechains. So, you know, beyond anything that Peter Todd has already said, you know, I can add one thing that's almost inarguable at this point, and that there's a certain camp within those who are developing things for Bitcoin that are literally trying to create this one world currency that people have been trying to get away from for the past 60-something years. So when you talk about we don't need any blockchains other than Bitcoin, well then suddenly, you know, you're talking about you're not going to be able to buy or sell anything without the mark, the QR code. So when, you know, this diversity and this ability to create new blockchains and to spread that hash power around instead of simply concentrating it on Bitcoin is part of the open source system that Satoshi Nakamoto envisioned. It's mentioned quite specifically in his white paper. So you know, sidechains, great technology. I think that there's a lot of fun things we can do with it. But this hyperbole over the death of altcoins is, you know, it's a bit premature.
That is a good idea, Bryce. A Litecoin sidechain, a Dogecoin sidechain, much like the Doge Party project mirrored the Counterparty project.
Why not?
Yeah. Christoph Atlas.
Yeah, so I think that sidechains do pose some challenges for altcoins in that there will be some added incentive to start bringing these currencies onto sidechains of the Bitcoin blockchain. There's numerous advantages associated with doing so, and although you can take any technology that's applied to Bitcoin and apply it to another alternative blockchain because it is open source and so forth, there are some powerful economic incentives or disincentives, I guess, against doing so, to do with the network effect of Bitcoin and liquidity and so forth. And so I'm definitely not predicting the end of altcoins. I think that maybe altcoins could even live happily on sidechains if that's where they want to be, and they would still exist, right? That would be for the end user, it wouldn't make a huge difference whether it's on a separate blockchain or a sidechain or whatever it is. They still have their units of currency. They have a specific market-determined value and so forth. So, you know, I think it's a bit pedantic to say whether they're better off on sidechains or on alternative chains at blockchains at this point. We just don't know. We need to experiment with the technology and find out. What's really interesting about the story, though, is like you have this company, Blockstream, that is going to basically try and write a lot of code, do a lot of designing and so forth, and lobby to get compatibility with sidechains added to Bitcoin. And it's not a small feat. It requires some non-trivial changes to Bitcoin. And in general, it's getting more and more difficult every day to add stuff to Bitcoin, right? So you have these investors who apparently have put several $1,000,000 into this effort, banking entirely on the idea that they are going to be able to successfully lobby to get this into Bitcoin. And I am really curious, like what was their risk analysis like to make this determination that they felt that confident that all of their money is going to be riding on this thing that's yet to be determined? That's kind of impressive and mysterious to me at the same time, and I'm really curious to see what happens with Blockstream in general.
They could have a backup plan, like Bryce is saying, going to Litecoin, going to Dogecoin. And you bring up a good point, Christoph, that Dogecoin is now merged mined with Litecoin. And I don't think that your average Doge user can tell the difference or really thinks about it that much. So maybe it won't matter if Doge is in a sidechain merged mined with Litecoin, part of Bitcoin. Bryce, did you want to follow up on the Blockstream idea?
Well, and you know, it's you know, not to spill the beans on what's coming up next, but for what Christoph was saying, what's the backup plan? You notice there's a few mining companies that are no longer offering their products to consumers and are now mining strictly for themselves. The backup plan could be, number one, you know, what's that money going to be spent for? Either A, it buys themselves a bunch of mining equipment, or B, it's propaganda and marketing in order to get this forked into the code.
It could be. It does destroy their argument of reusing Bitcoin and reusing Bitcoin's code if they go and launch an altcoin like Sidecoin or something. But if they have to, and if they could get the miners, which apparently are now just for sale, it's not a bad plan, not a bad backup plan.
Or there's more for sale than just the miners.
We'll see. Exit question. Which altcoin will survive? Pick one. Bryce Wiener.
Well, all things being considered, I'm going to go ahead and say Dirac. Why? It is on an algorithm other than Bitcoin. It is stewarded by myself and BlockTech and is currently merged mined. So when Sidechains come along, we're already ready for it. We can just roll it right into that ecosystem.
Christoph, Atlas.
Perhaps some of the more special, like I see the ones that are most resistant to that movement being the ones that are most specialized, something like a Namecoin or something along those lines. But then again, why shouldn't Namecoin go into a sidechain? I can't create a good argument against that at this point.
I'm not sure if it'll survive on its own, but Dogecoin continues to merge and change, and whatever is necessary, Dogecoin seems to do, and that might help them survive. Moving on, issue 2. KNC Miner just got rid of all the customers. KNC Miner isn't going to deal with returns, rebates, shipping, or even answering the phone because they're getting rid of all the customers, instead mining for themselves. In an abandoned helicopter hangout in the Arctic Circle, they're founding their first large-scale mine, with more to come online soon. And of course, they're selling stock. Christoph, Atlas, your thoughts about KNC going it alone?
The hangar and stuff, it makes it sound like there's like Cobra Commanders behind this plan or something. It's a little bit intense. Yeah, I like to compare Bitcoin mining with gold mining. I think it's a really interesting comparison because there are all these ways in which they are similar. What's different, of course, is that like gold mining at this point, they're not making the kind of advances at the same kind of rate that Bitcoin mining is, right? Like a month from now or a year from now or whatever, we're not going to be doubling our gold production because of some new breakthrough in that stuff. It doesn't follow Moore's law or anything like that. It's a very, very linear, kind of slow progress. At least we can get up into those asteroids or something like that, right? So in the gold mining era, the people that were making the most money were not people that were trying to mine a bunch of gold and then sit on it and hoard the gold. It was the people that were selling the equipment. And we've been talking about that parallel to Bitcoin mining for a while now, that, yeah, it's, you know, the people that are really making this money off of Bitcoin mining are the people that are selling the shovels and the picks, right? And so then it's a little bit confusing to see one of these companies stop doing that, and they'd be like, nope, we're not going to sell the shovels anymore. That was just too profitable. We've got a new plan now. But if you go back and look at, for example, like how much capital depreciation takes place between when the miners are ready to start mining Bitcoins, the physical devices, I mean, and when they arrive to a customer and they get all set up and ready to go and stuff like that, it's a substantial amount of time. It can take a couple of weeks. Sometimes it's shipping from around the world, and there's all kinds of subtleties in terms of, does it meet the expectations of the hash rate and the temperature management? There's all kinds of stuff, right? And so there is a substantial, because it's getting better so quickly at this point, if you can hold on to the devices, it really does make a huge difference. And so I can kind of see the logic behind it, and I'm curious to see where this goes. It does make you feel a little bit uneasy about the centralization of Bitcoin mining.
It definitely seems like a good idea, and given the Butterfly Labs revelations, it seems more honest what KNC is doing. They're like, well, we're not going to take this on a test net. We're not going to take a week and ship this to you so that you can put it in your, dirty, dog-infested home with the bad air and no air conditioning and no fire security and all these other things that a proper server room or even a proper helicopter hangar, I assume, would have. So it does make a lot of sense, but yes, Christoph, it does bring about centralization problems. Bryce, what do you think?
Well, Ice Station Zebra commentary aside, there is when you talk about the centralization issues and you compare it with what we were just talking about with sidechains, suddenly now it's centralization on top of centralization, because sidechain merge mined coins can now be merge mined with, on this equipment. And technically speaking, from a technical perspective, you can only merge mine with Bitcoin, SHA-256D. You can only merge mine about 6 coins together before you simply can't. And that's the extent of the amount of proof of work applications before the timings are wrong and you start to orphan blocks all the time. So that being said, now there's going to be a market for sidechains and who's going to mine what. And you're going to have these private mines that are set up and they're not open to the public and nobody cares, except for the fact that they're going to be mining money that nobody else can get. And we have the one problem of all economics that Bitcoin never, of all the problems of economics that Bitcoin attempts to address, the one it has never attempted to address is the distribution problem, the equality of distribution. And like, the number one Satoshi wallet is the living testimony to that. It is the shining star of centralization, and a lot of the things that have happened since then are just, well, Satoshi did it, so we can do it too. And I think KNC Miner, again, to an extent, is just being honest. However, it is a de facto admission that they have been mining with their consumers' equipment, and I hope to see SEC fries their asses for it.
I've heard a lot of people need to dust their KNC Miner equipment after it arrives new from the factory, but we'll see how that goes. Exit question, yes or no? And you know what that means. Yes or no? Will Bitcoin become centralized? Christoph Atlas.
Wow, that's an emotionally challenging question. Right now, I would say the evidence suggests maybe yes. Like, I don't have a good explanation of how it doesn't take place. If it does, I'm not too concerned, because I think a lot of the value that comes from Bitcoin is about the fact that it's decentralized and there's no people voting on whether transactions go through and so forth. And so if it loses that value, then people will just move to a new blockchain, a new coin, and we'll move on with their lives. I don't think it'll be the worst thing in the world.
And remember, the main problem isn't that it's decentralized, it's that someone else can take it out once it becomes decentralized. Bryce Wiener. Still muted.
There we go. All right. Will Bitcoin become centralized? Yes, it will become centralized. Is that a bad thing? Depends on how you look at it. I mean, if you're going for Bitcoin, and you're kind of like a cheerleader, well, okay, yeah, that's a bad thing, because then you lose like half of your libertarian arguments and all that. But if you're one of these folks like Christoph, I think, and myself, based on his comments, where changing the world is really the important part, and fixing all of the problems with society is the important part. And we know that blockchain technology offers, for the first time, a lot of that, an opportunity to do all of that. And so, if it becomes centralized, that probably means there's a lot of money that will come into it, because suddenly there's kind of a structure within the ecosystem that is familiar to fiat institutions, and we'll see a bit more money flow in there. And once that money is in that blockchain ecosystem, it's ours. It doesn't leave. And we know that's pretty much the truth too. So, the Bitcoin hasn't retained, while the price might be going down, if you look at the overall market cap, some of that is flowing back into altcoins. And it's not all simply venting from the market all at once. So there's a little bit of tugging back and forth, and I think that centralization really is just market forces.
And if we are going to compete with Visa and their incredible transaction network that does millions of transactions per second, we might need a centralized infrastructure. I'm not sure that we're going to get millions of transactions a second in some guy's garage, or even in a series of garages. Moving on, issue 3. MIT students can predict the future, but still not get a date. A complicated computer program written by MIT researchers can somehow take 200 million data points from the past, all the data from the present for 2 seconds, and predict the price of Bitcoin 10 seconds in the future. They traded more than 2,000 times and ended with profits of more than 89%. Bryce Wiener, has MIT invented that machine from the movie Pi? Can our future really be predicted so easily?
You know what? I'm gonna do something really funny. And I actually demonstrated this in public. I've actually taught people, in fact, how to do that. You do not need an advanced computer software package. You can predict the price of Bitcoin with relative accuracy in 15-minute windows. And there are day traders who are doing this right now. And in fact, it was last Friday, I think. It was about a week and a half ago, or maybe not even 2 weeks ago, where I was looking for bear whale, and the tracks of bear whale, and kind of stalking bear whale back to his hole. And when I noticed certain patterns in the markets, and quite frankly, I'll just go ahead and tell a tale out of school. You can take the Euro USD and BTC USD, and you can watch those markets in 1-minute ticker windows, and you will actually see a pattern of convergence within 15 minutes. You can just trade that all day long, and we have 2,000 trades. I think probably at this point we've probably got about 5 times more than that, and this is not even an automated system yet. But in fact, it is. Somebody somewhere has actually automated this series of arbitrage, this triangular arbitrage, and they've been running this, and you can see it in the charts. They've been running this for about 2 quarters now. And it has completely dominated the price patterns of the Bitcoin markets. So MIT is a little bit behind the curve on this one, I gotta say.
Christoph, Atlas.
I'm confused by people that publish papers and talk about predicting the price, and why they're not just walking around in a suit of gold and sitting on giant bags of money with dollar signs. And I don't know, I'm a little bit skeptical about this stuff. I'm sure that people will continue to find information advantages, insider trading, technological new algorithms, so forth. I'm sure that Bitcoin trading is still in its infancy, especially when it comes to high frequency trading and comparing that to the stock markets, because if you're already good at it, why not do it in a much larger market than in Bitcoin? Yeah, sure, that makes sense to me. But is it something that's sustainable? No. Like, as soon as you put the information out there, if it can propagate, then it ceases to be useful because everyone takes it into account, and they apply it, and now the pattern is no longer there, right? This is the whole thing about markets, is that everyone's got pretty similar information, and then there's a few outliers, and then there's all the schmucks that are getting taken for a ride, and it's a little bit like Bitcoin investing right now reminds me a bit of professional poker players online, right? There's these guys, they sit at home, they're really great at poker, and basically their living is taking money from the schmucks that are playing as amateurs poker online, who think that they're, like they can put their sunglasses on and read like a book about it, and they're gonna, they're gonna figure it out. So there's this wealth transfer from the idiots or the people that are just doing it for fun, to the real professionals, and yeah, that's certainly a component of trading, and it probably always will be.
Now, without
say, Christoph, you know what, you're absolutely right, and quite frankly, I could not agree more. That poker game absolutely exists, and that people, if you want to play, don't ever play with more than you're willing to lose, and because the sharks are coming, and just because if you have a formula today, it doesn't mean it's going to work tomorrow. And just because someone knows something today doesn't mean it's going to be valid tomorrow. And a lot of people have been really panicky about, the price fluctuations. If you can't take advantage of them, stay out.
Another great part of the poker analogy, Christoph, is that many of the poker sites were shut down. Much like the Bitcoin exchanges, one day you're full tilt poker, the next day you're Mt. Gox. We don't know what's going to happen with these exchanges, and they didn't know what was going to happen with their poker sites. Exit question: without the help of an MIT computer, predict the price of Bitcoin on Christmas. Forced prediction. Bryce Wiener, what do we got?
Okay, so everybody's wondering where the hell Second Market is. Barry, where's Second Market? We would like to all high-frequency trade Bitcoin, please. You've got my Forex terminals and everything all set up. I'm just missing you, Barry. So beyond that, I'm not sure. Right now we've been making jokes that Bitcoin is bleeding out like every other altcoin in existence with poor economics. So, with a floor of 250, barring any sort of pump or anything like that, I'm just going to go say it's going to hit the floor 300 or less. If it goes any higher than that, Second Market came online, and there's all kinds of HFTs going on to increase the velocity and whatnot, and all that other stuff happens.
Depressing. Christoph, Atlas.
It's either going to be $451, which is what my random number generator app just came up with, or it's going to be $1,231.
The correct answer is $525. Issue 4, Staples hacked. ApplePay released with double spending feature. ApplePay stumbled out of the gate this week with double charging customers, but I'm sure this problem can be easily fixed. Many merchants are refusing it because it doesn't work with their data mining royalty programs and the need to buy new cash registers. Meanwhile, another credit card hack, this time perhaps at Staples. Christoph, Atlas, your thoughts on ApplePay, Bitcoin, and Staples?
I still think that Apple Pay is going to be a useful thing to Bitcoin in that it's introducing mobile payments to consumers. I think that mobile payments will continue to be a thing for a while in Bitcoin and with other kinds of money, and so I think that's quite helpful. Is it the kind of revolution that Bitcoin is? No, but most people don't get that. They're still looking at Bitcoin as a payment mechanism. And I guess, to them, if they're just looking at the payment mechanism, then maybe Bitcoin doesn't look as exciting compared to something like Apple Pay, which is already pretty much working, with the exception of these speed bumps that they're going to hit for, during the introductory phase.
Bryce Wiener.
Well, you got to say, one could ask where the 180 billion Bitcoin went that were generated once, but we all like to gloss over those little things. So, yeah, these are just bumps in the road, ironing out the program. Now, the fact that Apple made it such a pain in the ass in order to get these charges reversed is something else. That's just terrible customer service. And some lawyer somewhere needed to be told to shut up, and Apple should have just simply assumed liability. Now, when it comes to the Staples hack, it's a little different. The financial, before any of these, before even Target, which was the first of these major financial institution breaches this year. Before Target, maybe about a week or so, and you can look this up, the front page of the Financial Times warned of upcoming cyber attacks. How did they know this? How did they know it was going to happen? Because a week later it was Target. And then every month since then, at least once a month, we've had one more fantastically, just outrageous breach of security that has resulted in the loss of funds and, more importantly, the loss of customer data. So now you've got, have you ever money at Staples and Target? Maybe you have. If you have, there's a good chance that now we can begin to build profiles of you across of your spending habits across multiple. What's your trade? You also trade on J.P. Morgan. Imagine the guy who's in the middle of all three of these breaches. You know everything there is to know about that guy. You can literally tell probably what he had to eat, or what kind of pencils he likes to buy, or what kind of crappy Chinese-made clothes he likes to wear. So this sort of thing, I think, is a very much an orchestrated event, and I'm not sure. Obviously, I'm not sure who's behind it, but whoever it is making out literally like a bandit. I mean, this is like Bonnie and Clyde robbing banks 100 years ago, and now they're just doing it with technology instead of a gun.
That's a good point, Bryce. It's not just the credit card numbers that were stolen, it's the personal information. And in some cases, especially aligning that across multiple companies, that could be more valuable than the credit card information, which will all be changed and fixed anyway. So, exit question. ApplePay, on a scale of innovation from 1 to 10, 1 meaning an insignificant nothing, with 10 meaning absolute metaphysical perfection. Christoph, Atlas, ApplePay is a
3.
3. Bryce.
I'm going to give it a 4.
Wow, you guys are mean. I'm thinking more like a 6 or a 7. It's going to crush the credit cards like iTunes did. That's a pretty big deal.
Yeah, but maybe, except it still has to compete with PayPal, which also now accepts Bitcoin. So if they can get beyond that hump, more power to them. But they got quite a hill to climb just in having a captive ecosystem.
We'll see. They had the advantage before with iTunes, but you're right. They didn't have a competing iTunes product as PayPal can clearly offer them. Moving on to questions and answers. We're just going to start off right at the top here. Jamie asks, what are the group's thoughts on the Cripsy lawsuit? And are the other altcoin exchanges at risk? As some of you know, Cripsy received a lawsuit yesterday. I haven't gotten through much of it, but personally, yes, I would transfer my money out of Cripsy. Bryce, what do you think about the Cripsy lawsuit?
I think whoever that was just stole my story. This is huge. Project Investors Incorporated in Florida has been a mainstay of not only the markets but also a lot of the marketing of Bitcoin and the alt space. And as so far as even speaking at Inside Bitcoins and sharing the stage with the likes of Mark Andreessen earlier this year. So I gotta say this is pretty damning stuff. Some of us not so shocked, but by the same token, this is with Mint Pal Moolah, and now with this Cripsy thing, which I think has probably been keyed off by someone actually figured out they were going to get an SEC letter too. And there's a couple of other folks that are shaking in their boots, waiting for the SEC to come bother them too. So I think that this is going to be the next wave of stuff. It's our turn instead of China. And we're going to have this wave of shutting down of bad actors, beginning with Butterfly Labs and continuing all the way through until it just falls down like a set of dominoes.
Christoph, Atlas.
Can we just please have some decentralized exchanges, for the love of God? I'm so sick of one empty box after another. It's just the same boring story over and over again.
That's the interesting complexity of cryptocurrencies. We have to build all these centralized bridges so that we can get to this decentralized future where we won't need all those bridges. But we still have to build them. So it's been confusing to everyone. Next question. Is there a group of, I always say this word wrong, let me see, machoistic investors, government contractors, Bitcoin purists, deliberately causing chaos, volatility, distrust in an effort to bring down the altcoin market? Is there a, what they call it in Fight Club, Project Chaos, Project Mayhem, something like that? Is there one of those? Bryce, is there one? Are you the leader?
Well, to bring down Bitcoin, no, there's no.
I'm saying bring down altcoin, but there could be groups on both sides. I would.
Oh, well, if you're asking me if I'm the leader, I would be like, altcoins trying to bring down Bitcoin. Well, maybe. There is no cartel. But beyond that, I don't really think that there's an organized effort. I think what there are is a lot of pump groups that originated from the Bitcoin pump groups from late 2013 and who have since moved their money into the alt market and have been running a number of scams and pump and dump schemes throughout the alt market. And that's actually what folks have been seeing. And we've actually identified maybe about 3 or 4 of them. We know who they are at this point. They like to show off and brag. So eventually, everybody knows who everybody is. And I keep a respectful distance because I'm a personality and a name in the space, and I'm running a business. But when you look across the bar and you see that guy sitting over there in the corner, and you know who he is, and he knows who you is, we just kind of give each other a nod and keep doing our thing. I'll let the government sort that kind of shit out. That's not my job.
Christoph Atlas, is there a Project Mayhem for altcoins?
There's certainly there are some significant parties that are very skeptical about the future of altcoins, and I think that the Nakamoto Institute is one of the organizations that kind of spearheads that skepticism, but they're not doing anything. They're not doing anything to bring about the end of altcoins other than arguing against it. As for investor, no, I think it's mostly the altcoin. When altcoins go down, I think it's mostly the altcoin team that's to blame for it, and not Bitcoiners. I think they're imploding themselves. I think the scammers and the pump and dumpers and so forth are the ones that really give altcoins a bad name and just drain wealth from people who are somewhat productive and honest to scammers, and it's an unfortunate tendency, but right now I don't really see any way to stop it from happening.
There's also a limited number of stories. We can only have a story like new altcoins coming up, new altcoins going down, new anonymous coins going up, new anonymous coins going down. The next story is Sidechains, Ethereum, whatever it is, killing altcoins, then not killing altcoins, then altcoins coming back and not killing them, back and forth. Don't you think, Bryce, there's only a limited number of things to talk about?
Except, and one of the things that we saw this today, and I spoke a little bit, I tweeted a little bit about it. There was actually a study released on the anonymity of Bitcoin when utilized in conjunction with the Tor network. And in fact, what happens is because of the nature of the Tor network, it makes it less private to use Bitcoin through Tor than it is to just simply use Bitcoin. So, one of the currencies that we steward, Razor, exists purely within the Tor network. So it does not have any of those issues. And it's only crossing between that boundary between the clear net and the deep web that allows, and it's that being able to pinpoint where you've crossed that boundary that enables the identification of the transactions that happen within Tor. And this is just brand new stuff. I mean, this was just published like a couple days ago. So there is some things that altcoins can do that Bitcoin can't do, and that's just a simple fact of the matter.
There's probably a relatively limited number of Bitcoin transactions going on through Tor, so if you just tracked them all, you'd be well closer to alleged criminal activity because they're using Tor.
Well, and the theory being is if everybody uses Tor, and if everybody uses stealth addresses, and everybody uses privacy solutions, then there is no way to find any. Then not using them is worse.
That's what we need. We need to fill up all the honeypots, get all the data in there together. Let's move on to the next question. What are your thoughts on tree chains opposed to side chains, especially with centralization issues? I'm not that familiar with tree chains. What do you guys know about tree chains? Read anything yet?
Go ahead, Bryce.
Oh, I was just going to say, I haven't had the opportunity to talk with Peter Todd about it specifically to answer some questions I might have. However, the one thing that all of these solutions have in common is a cryptographic linkage to Bitcoin itself. And through that linkage, there is an attempted transfer of value. However, when certain portions of the network become dependent on Bitcoin, there's an interesting effect that may or may not happen. It's purely theoretical in regard to the value of the chain. Does it then act as a derivative, or does it have a value independent of Bitcoin because it possessed it at one time? We've done some market experiments with different kinds of trading pairs and then adding other kinds to see if it retains that original value. And over time, what happens is the value of the coin is eventually determined by the most commonly traded pair. So if you have something that you are going to cryptographically tie to Bitcoin via a smart contract, either that be with tree chains or with sidechains, what we've already seen so far in the markets is that there becomes a de facto derivative, which means if I get leverage on Bitfinex for $5 million, I can now not only short Bitcoin into the floor, but I can short everything attached to Bitcoin into the floor. And then the price of the entire ecosystem goes down all at once. And I think that's the number one danger that we're looking at with all of these different solutions.
All of our eggs in one basket. Christoph, your thoughts?
Yeah, this is a complicated area, not an area of expertise for me. I will say that the Ask Me Anything on Reddit thread about the sidechain stuff, they did sort of address this question. Basically what they were saying was tree chains, sidechains, they sound similar, the names are similar, and the idea for tree chains, which seem to primarily come from people like Peter Todd, they were sort of born out of some criticisms of sidechains. So in people's minds, they're linked somehow, but really they are two unrelated kinds of ideas. You could do one or the other. You could do both. They could both live. They could both coexist happily, and it's not a matter of choosing one or the other. As for the value of these currencies or these tokens or whatever you want to talk about that would exist in these side chains, another thing that they brought up in the AMA, which I thought was quite helpful, was talking about what does this two-way peg idea mean. So what they said was, here's how you can think about it. Let's say you have Bitcoin, you have a side chain with a token called Sidecoin, right? And basically all of the Bitcoins that are allocated to the Sidecoin sidechain, right? That the total amount of that is worth whatever that amount of Bitcoins is. So let's just say it's 5 Bitcoins at $300. That's about $1,500 total, right? Now the sidechain developers, they get to choose how that entire pie, the $1,500 pie, is divided up. So it could be that there's a 1-to-1 ratio and they swap in between, in which case they're very carefully pegged to the value of Bitcoin. Or it could be something different. Like they said, imagine if it's a lotto coin where you buy these, you put the Bitcoin into the lotto coin sidechain, and then every week or so, all of the value goes to the winner of the lottery, right? In which case, one person gets the whole pie that represents lotto coin for that week. So the size of the pie doesn't change at all. I don't really see, unless these sidechains get really quite massive, they're not going to impact the value of Bitcoin a whole lot, in my estimation. But there's going to be a lot of latitude for the sidechain developers to determine how does the pie get divided up, basically. And I think that's a very helpful way of understanding what's going to be the relationship between the sidechain value and the Bitcoin value.
Excellent comments on sidechains and tree chains. We've got another comment. I think this goes back to the credit card issue. He says, it's been so helpful that these companies that experience breaches offer extra added fraud protection policies for the price of a cup of coffee. So caring. It really does seem like the credit cards seem to have this problem over and over again, this insecure system where if somebody gets your little string of numbers, they can call anyone up on the phone and buy anything they want in the world with that little string of numbers, or go to the gas station and buy gas for every car in the lot for your little string of numbers. And this just keeps happening over and over again. They can't seem to upgrade their system from the string of numbers protection system. So it's been disappointing.
Well, to be fair, a private key is really just a string of numbers. It's just 2 or 3 times longer than a credit card number.
But we don't have to give out the private key when we send the money. The money sending system's different.
Right, with Bitcoin it's a key pair, whereas with the credit cards it's just a symmetric key basically that we're just giving out to everyone.
Don't everybody all jump on me now. But the concept is still the same. If someone steals your wallet, then they have your credit cards. If someone steals your laptop, then they have your private keys, which is why we
every time I use my credit card, I'd be giving someone my wallet.
You know, and this is why we enable people to encrypt their private keys. And I think that wallet makers, wallet producers, I don't know, whatever the hell they call it, wallet software producers, should take a lot of care in fixing some of the problems of the Satoshi client, where you cannot operate the client without encrypting your password, without encrypting your private key. I have no idea who even would use one of these networks without an encrypted private key. It's beyond me.
I think that Bitcoin and other cryptocurrencies have a huge advantage in terms of security. Signature addresses rolling out. We now have 3 big websites that are very easy to use that give you multi-signature capability. And with the credit card system, they had something kind of like multi-signature in the sense that you would authorize a transaction, or whoever has a credit card number, and then there'd be the credit card company who would have a fraud detection system that would also sign off on things. And if they didn't like what they were seeing, then they would cease to sign off on these transactions. It's not a very good system. It's very difficult to identify fraud in these ways, and so I think multi-sig is a much stronger approach. And I've said this before on the show, but I'm going to say it again because I think it's important to keep in mind. When we have these credit cards, if someone uses our card and it, we didn't authorize it or whatever, I've personally, like, every time that's happened to me, they just said, don't worry about it. We'll take care of it. Here, we'll send you a new card. No big deal, right? And even if it's like hundreds or thousands of dollars, and the reason is because they're making out like freaking bandits as these middlemen that are, taking fees off of every transaction, sizable fees to say the least. And so that's what pays for this convenience that we have. It's a hidden charge that we don't see. It just means that merchants have to up their, how expensive things are, and it's a kind of a hidden tax on the credit card users. So I'll be very glad to see that go away as we segue into cryptocurrencies.
Justice wants to add, and he says, credit cards are not a proper analogy for Bitcoin. Bitcoin is digital cash, not a credit card replacement. So that is probably a better analogy. We've also got a question, like you guys were talking about, multi-sig wallets. He asks, are there any multi-sig wallets that let you generate your own key? Most provide you with the key. How do you know they're not saved, even unintentionally? I've only really used copay and really only limited in a limited fashion. It seems okay. I'm not sure. They have the original key, so what do you think, Christoph? Totally insecure?
Yeah, it's not ideal, to say the least. It would be better to have something more like the blockchain.info thing, where you can where things are at least generated all in your browser. I'm not sure. I haven't looked at the internals of some of these websites to see whether it's being done client side or server side or whatever. Obviously, the server side is a much weaker kind of approach. But keep in mind with like client-side wallets like Bitcoin Core and so forth, you can still do multi-sig. You can generate your own private keys. It's a little bit less user-friendly, to say the least, but it's something that's in there right now. So I think you have to open up the console in Bitcoin Core to actually make this happen, but you can do it.
No one can use the command line. No one can use console. Come on. Bryce, your thoughts?
Well, and the one thing that is truly revolutionary, I think, in regard to wallet technology and is really underused right now is hierarchical deterministic wallets. I think those are pure genius. And that system allows for instance, like CoinKite. I know they use hierarchical. They're called HD wallets because that's like 15 syllables at once. I know that they use HD wallets, and what their catastrophe plan is in the event of a catastrophic failure of their systems, because they provide a merchant remittance service, and in a catastrophic failure of their service, they are able to publish a key which will enable users, and they just put on, in fact, they've said, we're going to put it on our Twitter feed. And all of the users of their system can take that key plus their key, and that will make their private key and give them access to all of their funds, and takes CoinKite right out of the equation completely. So what you're doing is you are giving them what these HD wallets allow is for third parties to have permission to hold your Bitcoin, to hold your coins, because you are taking advantage of a greater service that they are providing. However, that is always still in your control. You can still, you still have a private key. You still have access and recourse to those funds. And I think HD wallets are probably going to, in conjunction with multi-sig, that is what is required for business using the blockchains.
Things are getting incredibly complicated. Multi-layers upon layers upon layers.
And what the one thing that HD wallets really allow for is within the ecosystem you have zero confirmation transactions with 100% surety of funds. You can actually resolve those transactions without going through the blockchain or miners because it happens within the HD wallet chain itself.
All right, we've got one more question from Silver Miner, and this one's pretty much news to me and might be news to you guys as well. He says, have you seen this 3-part presentation from early adopter Carl Gray, who states that JP Morgan is actively trading Bitcoin and has been for a while now? Any opinions on this? Do you reckon that they are trying to corner the market? This is the first I'm hearing of this, Bryce. Have you heard anything about JP Morgan trading Bitcoins or perhaps Carl Gray?
You know what? I wouldn't be able to say what I have and have not heard. However, I can say for absolute fact that for the past 4 months, we've seen a dramatic match between the Euro USD market and the USD BTC market. And those are 2 separate Forex markets. And in order to take advantage of that, you have to have something like a Bloomberg terminal or access to both markets at the same time. And outside of maybe BlockTech and Pantera Capital and a few other folks, I'm wondering who it is that might have access to all of that and be able to create that massive amount of swing in the markets to literally match the flow between those 2 Forex. So you know what? I think the proof is out there. I'm not going to say that. I'm pretty sure that that's true.
Definitely one of the ways that the banks could co-opt Bitcoin would be by owning a large portion of it. Acquiring it would be difficult, keeping it quiet, all of those things. But if they pulled it off, that would change things. Christoph, any thoughts?
Yeah, I think that in many places in government, and really at this point JP Morgan Chase is not all that different from the government. There's the game plan is just to kind of to stall and delay. Like people have a sense that things are coming to some kind of head. Maybe not like a tremendous dramatic collapse, but definitely some huge changes, some huge shifts. And so I think there's this stalling tactic going on in the U.S. government, in European governments, Japan, China to some extent. So if I'm JP Morgan Chase and I'm thinking, okay, well there's a 1% chance that Bitcoin is going to become a problem for us in the future, be really competitive with the US dollar, disintermediate banks and so forth, then probably what I would do is I'd try to figure out some kind of formula where I can make a little bit of money off of Bitcoin or not lose too much money off of Bitcoin and keep messing with the price. Really try to jack up the volatility and just keep people on their feet constantly, because that's going to, of course, delay the amount of capital that goes into Bitcoin, make investors wary. Maybe you continually push out and fund journalism that emphasizes the volatility of Bitcoin and the fact that it's not backed by blah, blah, blah. You know, every once in a while I'll catch a bug in my apartment, and what I do is I put it in a little, like, I don't want them to squish them. I put them outside, so I get a little plastic cup, and if they're not a bug that can fly, and I'll just kind of shake the cup as I'm walking to the door so that I can put it outside. And as I'm shaking the cup, the bug just cannot climb up the side of this little cup. It's trying really, really hard to get the hell out of this cup and stay in the house, but I keep shaking it, and it's off balance, and it just can't get up the walls of that cup. And so that's what I'd be doing if I was JP Morgan and I had all this money, and I try to figure out a formula of that and just keep nailing the Bitcoin in that way. And I think there's a real possibility that's taking place. I can't say for sure, but it seems very plausible.
Good point. Good metaphor. Moving on to predictions or story of the week. Bryce, I know they stole your story earlier, but do you want to just recap it one more time? Here you go.
Yeah, Cripsy is going to see their day in court. This lawyer is, in fact, I checked the guy out. The guy is totally legit. Case is legit. Complaints are legit. There's a laundry list of stuff, and I think what we're going to see, we might actually see with the beginning of legal precedent for how to approach these things, which is ultimately, in lieu of regulation or existing law, that's legal precedent is the law of the land. So if this actually gets to court and gets some sort of resolution, this could be, this could make a lot of stuff with Ben Lawsky or all this other stuff kind of moot.
It always seemed risky that Cripsy was in Florida. They always had so many coins, and then they sold a crypto stocks equity on crypto stocks. It's always been a lot of, and then eventually did actually release USD trading like they said they were going to. It's always been a lot of clouds and confusion over the hundreds and hundreds of altcoins you could buy on Cripsy. Christoph, Atlas, your prediction or story of the week.
Yeah, my story of the week, it's a little bit on the old side, but kind of new to me. A week or two ago, might have been a couple of weeks at this point, there was this talk about, Overstock came out and they said they're going to be using the counterparty platform, that they're trying to build out this infrastructure for kind of a decentralized stock market exchange type thingy. And so I listened to Patrick Byrne's speech. There's a recording on the Let's Talk Bitcoin podcast feed, and I thought it was a really interesting speech and presentation. I'm really curious to see where this story goes, and to me it's new in a number of ways, but what's really captivated me about the story is there's going to be this incredible clash in this story between a vision of decentralized finance and the status quo. But for the first time, it's going to be someone with some serious pockets and some, not a small amount of influence. I know Patrick Byrne, he probably doesn't have the ear of 100 senators or anything like that in the same way that, let's say, JP Morgan Chase does. But, he has, they have some serious money to put behind this idea. And they're going to be working really hard to make it legally compliant. Like that's completely their goal. And so it's kind of fascinating to see like, can this happen? It seems like the most significant things that have happened so far have either in the Bitcoin space and decentralizing things have just ignored the law. They tried to keep things on the down low. There was not a lot of funding behind these projects. And so I want to see what happens when Patrick Byrne, with his Overstock money bags and his reputation and so forth, goes head-to-head with these Wall Street potentially organized criminals that want to keep the status quo. It's going to be quite a fight. I don't know how it will shake out, but it will be certainly interesting.
Battle of the Titans should be a good one. Our condolences and deepest thoughts go out to our neighbors to the north, Canada. Living in the United States, you see these events so often on the news, you just become callous and jaded. What's truly sad, other than the senseless loss of life and the end of innocence, is to see that in reacting to this nightmare, Canada is becoming less like themselves and more like us. We're out of time. Until next time, bye-bye.